Hello, everyone. Welcome to VRIC Media, your most trusted voice in metals and mining. I'm your host, Daryl Thomas, and today we have the pleasure of interviewing Clem Chambers, who is the CEO and founder of a new FN.com. And you also contribute to a Substack, which I've been checking out as well. So you're doing a lot of work. You're a contributor to Seeking Alpha as well as Forbes and such. And so how you doing today, Clem?
I'm doing great. I'm waiting for American government to get its money supply back on track so that the market can keep going up again. So,
I feel you on that. I feel you on that 100%. So just thinking about that, right? The Fed recently came out and they mentioned some hints at pivoting from quantitative tightening to eventually expanding their balance sheet and such. And so I want to get your perspective there in terms of liquidity and what is the market currently experiencing because of the Fed's actions or whatnot.
Well, something occurred to me literally only this morning. I mean, if you really want to know which way the market's going, which is the only thing you really need to know, because, if you know it's going up or down, you can pick random big caps and it'll be in your favor. So all you really need to know is which way the market's going. But the best way to see that is to see which way the money supply is going, because you can't buy stocks, you ain't got no cash. And the Fed obviously manages how much money is in the market. Now, they blew out their balance sheet because of COVID, and they were, everyone's saying, oh, you've got too much in your balance sheet. And they're probably going, oh, no, that's rather a large amount of money. Oh, that could go wrong. Let's get it down. And there's all this extra money in the market, so let's get that down, but slowly, gently. So they've been tightening, and the excess money, which is in something called the reverse repo. By the way, I just did a YouTube on all this, if you want to go look. Anyway, reverse repo, that's the excess money in the market. That's been going down because the balance sheet's been going down, right? So it's going down, and it's gone to zero, okay? Wow. Well, zero, there's something called negative, minus. And so it's gone minus, and they've been pumping money into the economy through something called the standing repo facility, which is basically just a big bucket of money that banks can go, oh, I need some money. Oh, thank you very much. And so it's like an emergency liquidity, cash facility, when things don't quite go the way that they were intended. And they invented it back when Silicon Valley Bank went bust. And they went, how are we going to put emergency funds in? And they expanded their balance sheet, and they had this bucket of money so that banks could come and say, we've got tons of money, the Fed's giving it to us, don't you worry, don't have a bank run. So they've had to go back and be put money in that bucket because the banking system has got a little bit tight on their cash flow. But what occurred to me this morning, and I don't know, sometimes you go, duh. It's like, so they've been doing this, You can't just stop. It has lags and momentum. So they've gone, right, we've got to zero now. Excellent, we've done a great job. And it's kept on going because their sort of activities is not like a light bulb, you switch it on and off. The hysteresis, which is the lag in that, is quite big. So it's probably more than they were expecting. So they've kind of said, right, supertanker, stop. And it's gone. It's carried on going, carried on sucking money out of the economy. And then, of course, up pops the government closure and the Treasury goes, that's my money now. You can't have it. No. This is a shutdown. We keep the money. So the Treasury pulls more cash out of the economy. And all of a sudden, there's a bit of a cash famine. Well, it's reopened. So the government should be able to pay people, and that money will be back into the economy. So the money should be on its way if it's not already here. So over the next few days, that should regulate out. And then the Fed's on the case because they've actually pumped money in. You can see that in their figures they hand out. So they're basically kind of going, whoa there, or whatever, run. That they are in between states. And that's what's made the market go choppy. And if you look at the volatility in prices, say, for example, gold, it's gone suddenly, which is a sign of stress, because volatility is stress. Volatility is a measure of the unknown. Volatility is unsmoothness, right? And that unsmoothness has gone into the markets a few days ago. And you can actually see it there, but it will suddenly go back to tight again, or not volatile, and then I'm expected to go and get back on the road.
Yeah. So liquidity drives the markets, and liquidity's been drying up. And then right now, the Fed is looking to support the banks and add liquidity back to the system, so that, I mean, ultimately, it's going to keep the gravy train running. I want to get your perspective on the. Right now, we have a few things. So one thing is. In January, I believe it's January, the Supreme Court has they opened the case about whether Trump can fire Fed Governor Lisa Cook, which that has been talked about a few times. It's been kind of silent recently, but the question of Fed independence is going to come into question when that case is brought forth, as well as Jerome Powell. His term is up in May of next year, and so just want to get your longer term outlook on potential monetary policy moving forward.
Well, I mean, you could look at the Fed and say they run the country because they run the economy. And, the government regulates the economy and probably gets in the way of the economy in lots of instances. But the people that actually, because, you said liquidity is important. Liquidity is everything. Absolutely everything. That is the fuel that fuels the engine. So in many ways, the guy that puts the petrol in the petrol tank is just as important as the guy who's behind the steering wheel. So they have an incredibly important role to play, and they're not independent by accident. The whole point of them being independent is so they don't get messed around by wild politicians trying to get them to do what the politician wants to do to get re-elected. Well, how could that be a thing going forward? So, I wouldn't expect the Fed to lose its independence, because in a sense, if it loses its independence, it loses its point to exist. And, if you want to see non-independent central banks, then you're looking at South America, aren't you? And if you're looking at countries that have, great economies, Germany, Britain, Europe, America, they've all got central banks that are independent. That doesn't mean that they go around trolling the government. They do what they feel they need to do for optimum economic performance. And that's a balance between inflation, which they want a little bit, but not too much, and employment, which they want enough of that, but not too much of that it makes inflation. And that's the balancing act that they do. And right now you're seeing the Fed doing a balancing act because it's now got to change course. It's got to pivot from very gentle and very clever tightening to perhaps a little bit of loosening, and that's turning the super tanker around. And boy, is it a super tanker, 30 whatever billion, trillion, zillions they actually are dealing with. I mean, it's the whole of the money supply of the whole of the economy is under their purview, and it's a titanic job.
Yeah, definitely. So recently, I was reading an article from Ray Dalio on the Fed pivoting and stimulating into a bubble, and he mentions like the Fed has to step in. Well, who's buying the U.S. debt right now? And so that kind of becomes the question. And we know that central banks have been buying gold and such. And so looking at the Fed adding liquidity to the system, however we frame it, quantitative easing, or maybe they've named it something else by now, who knows? But just curious in your perspective on who buys the government debt to fund the deficit spending that we have, as well as some of the initiatives of the Trump administration.
That is an easy one. The government buys it. Now, that is, I think, strictly illegal for government to monetize its debt. But it's done it on several occasions since 2008. And of course, nobody goes, stop that, it's naughty, when it's their mortgage on the line. So nobody really wants the American government to say, oh, no one wants to buy it. Oh, let's put interest rates up. Oh, yeah, let's go into a recession. Oh, we've been very naughty spending all this money. So when the government wants to monetize its debt, I print a bond and then turn that bond straight into cash, they do it. Or they find a way of doing it, or there's a way around the rules and the guardrails for them to be able to do it. And they've done it. I think they did it during COVID. They certainly did it during the credit crisis in 2007-8. So they just print it. I mean, that's it. Don't we all know that?
Mm-hmm. Yeah, I was curious if the Fed plays a role in that, in terms of I think Trump is. He's appointed a couple of one or two governors. I think a couple of governors had left, and obviously, getting people that align with the thinking of wherever the administration is trying to go, and then Powell stepping down in May, and kind of wondering, okay, who is Trump going to appoint then? Is he going to appoint someone that is going to be more favorable to his policies and maybe want to vote for the gravy train to keep going?
Of course, he'll try to get people in that will listen to him. I mean, the Fed doesn't do what it does to be a pain in the neck. It does what it does to try to keep the train on the tracks. And if you look at the train, it's been run by a bunch of politicians who are spending like drunk sailors. And it's having to try to keep that on the rails. It's not causing the problem. It's not causing this huge fiscal deficit. It's not causing the trade deficit. It's not causing any of that. And it has to try to keep things on the rails while that is going on. You can't blame the Fed for the deficit. You can't blame the Fed for the balance of trade. You can't blame the Fed for the hollowing out of American industry. You can't blame any of that on the Fed. It has to try to keep it going. And you call it a gravy train, but it's no gravy train. Not for America. It's been a gravy train for China, for sure.
All right, let's dive into that. So, gravy train for China. Unpack that a little more for me.
Well, I mean, the import-export deficit, the trade deficit, has been basically America paying away its assets to providers of imports. Yeah, and they've done that on purpose because, if you want to rule the world, you better be, that Uncle Sam helping everybody or tying everybody to you, right? If you wanted to cut them off and be very insular, which is back in the day that was a big political thing, you wouldn't have to import all this stuff. You wouldn't have to export your manufacture to China. You do what Trump's done, which is make it, easier to do it at home. And you make it hard for people to import to you, and therefore they don't get a leg up, which is, one geopolitical way to behave, probably not the best. Or you go and you say, hey, we're your friend of everybody, let's all be friends, and let's let everybody rely on you and be the reserve currency and all that good stuff, and end up throwing your weight around and spend all your treasure on meddling in foreign countries' affairs, which is another political way of doing it. And, that the old political way has taken America from being the country that had all the money after the Second World War to being a country that has vast debts. Well, where's all that money gone? Yeah, it's gone in exports and imports. It's gone in trade deficits, and it's gone on spending on all sorts of crazy stuff.
Yeah, definitely. So I recently was listening to an interview you did with David Lin, who's a friend of the show, and you were mentioning rare earths and such. And so I want to get your perspective on the whole rare earth situation. I know that Trump came in and tried to bully China, and China, I think Xi Jinping used those exact words, like, we're not going to be bullied. And that was ineffective. Obviously, China had some rare earth export curbs that they put on, and then there was a recent meeting with Trump and Xi Jinping, and that I guess they came up with a year-long trade agreement or something of that nature. And so I'm just curious, in your perspective, there is that trade over?
Well, okay, I kind of came to a conclusion over the weekend at the German gold show, which is run by Soar Financial. And it occurred to me, the simplest way to summarize what's coming up is there won't be any commodities. Commodities are going away. They're going to be luxuries. Now, if you look at rare earth, people say, rare earth, they've been cut off. Well, they kind of have, but where they've really been cut off is that if you want them, you're going to have to pay a lot more. You're going to have to pay enough for people to start manufacturing them, processing them, not in China. Yeah, there is enough to go around, but you have to pay more. And what China has done, and as some friends of mine in the magnet business said, companies have got used to eating caviar and drinking champagne on the price of hamburgers. And that's been China's strategy: sell it cheap so no one else can afford to do it. And they won't want to do it because it's environmentally really, really dangerous. And so we will undercut everybody and make sure nobody else can make this stuff. And we're undercut them in the precursors, we're undercut them in the equipment, and we're undercut them in the feedstock. And therefore they have to get it from us. And then if they give us any trouble, we'll pull it. And then what they're going to do? They can't afford to get off the champagne and caviar bandwagon at hamburger prices. So they won't. I mean, Mountain Pass, who've got a great set of rare earths up there, they've gone bust a number of times because every time they get going, China undercuts them, so they go bust. Right? So basically, China's dumped on everybody. But you put that price up, which is what Trump has done. He's doubled the price of rare earth. If you make it in America, you pay twice the world price, the international price of rare earths for it. Yeah. Well, funny enough, the price fix it. The what did they say? The solution to low prices is low prices, and the solution to high prices is high prices. Yeah, you put the price up, all of a sudden people find new reserves, people find ways of doing it. I mean, I'm in the IP for processing rare earth using a completely innovative way of doing it, and nobody would look at it 2 years ago because the Chinese would say, have it cheap, have it for half price. And now they look at it and go, oh, I need a new process that gets around all this Chinese technology. And that we're in that space, but it's because they've undercut everybody that we weren't there already. But now nobody trusts them to undercut the world and then supply it when the push comes to the shove. So they'll have to pay a going rate. It's the same for copper. I mean, copper's going to get very, very, very expensive. Yeah, it won't be like a commodity. I mean, commodity for me is synonymous with cheap, plentiful, and generic, right? Well, you know, when the world demands 4 or 5 times more copper than they actually produce, all of a sudden it ain't no commodity anymore. All of a sudden it's a luxury. And that's the commodities are going to go into a phase where they're going to become, you know, much more highly valued because the demand for them is about to spiral out of control.
We've got 3 of the best porphyry copper targets that I've seen in the past 25 years of exploring for porphyries. Vizsla Copper, we're the team that brought you successes including ISO Energy and Vizsla Silver. We've put our foot on 2 outstanding projects in central British Columbia with copper and gold and some molybdenum in there. Our Poplar South project, we're drilling there at the moment, and I think we're on the verge of a major discovery. If you want to learn more, you can find us at vizslacopper.com.
So thinking about the whole reshoring, the kind of protectionist policies, you know, and then you have like these realignments with certain nations on global trade around commodities and such. And you mentioned how expensive it is because China has undercut the market in terms of offering significantly cheaper prices, hamburger prices, compared to how much it would cost for someone like the United States to pay someone in-house or within the nation to produce these or refine these metals. And so I'm curious with how much money is going to have to be printed to even, you know, support this this initiative.
Well, you know, money, I've turned to calling it confetti, right? Nothing wrong with confetti. If I come around and I give you a big pile of American dollar confetti, you're not unhappy with me. You're not going to wake up tomorrow and find out it's not worth anything. It might go down, you know, if I give you $1,000, it might be worth 25 cents less tomorrow, but you're pretty happy with that confetti. And printing confetti to make people do things, that's not a bad idea. It's when you print confetti and you waste it. Yeah. And you waste it by misapplying the confetti on stupid stuff. I mean, I don't know whether it's still the case, but a few years ago I looked into it. America spends $100 million counting trees every year.
Wow.
$100 million counting trees? I'm sure there were people who could stand up and tell me why that's a great expenditure. But anyway, when you do that, I don't know how many tree counters you get for your 100 million, but they're running around being not very productive. Or maybe they're saving the world from something that we don't know about. But anyway, they could be doing something of a lot higher value. And if you went and said, hey, here's that 100 million, we're going to do a rare earth thing with that, well, that would be productive, wouldn't it? So if you take confetti and turn it into productive things, bricks, buildings, electronics, whatever, that's fine. That doesn't create inflation. It creates demand and it creates supply. It's when the confetti just creates demand and no more supply. That's when you've got a problem. And right now, we're on the cusp of the ability to spend confetti on a huge increase in productivity. has been a terrible, terrible lag of productivity in the West in particular. Apparently because people have just got a bit more lazy than they were. But I personally think it's because they're doing the zombie walk, looking at Facebook or whatever, or Twitter or us. Yeah. And they're not actually working. They're too busy doing other things. But that productivity's gone. I mean, I think it's gone down, but they'll say it hasn't gone up by much. But all this automation, all these robots, all this AI that's coming, that everyone's saying, oh, I'm going to be put out of a job. Yeah, what are you doing in that job? Tell me how many hours a day you're working on that job. Tell me how productive you're being. They probably won't answer that question. But outside of that, the productivity coming from robots and automation and AI is going to be dramatic, absolutely dramatic. That's why they can cut off all these immigrants now and not have them do all the cheap work, because they're hoping, they're bargaining that the robots will do it. So there'll be robots blowing the leaves down your road. There'll be robots picking grapes. There'll be robots, driving your tractors. Well, they're almost robots already, but you see what I'm saying? So that increase in productivity will be absolutely dramatic. So it doesn't matter that you have 10 times as much confetti, because there'll be 10 times as much supply of stuff, right? So that's not inflationary. Obviously, the road between now and then is full of bumps and potholes, and the ability for natural stupidity to step in and wreck it all. But that's the direction they're trying to push it. They're going to go hell for leather for robotics to replace people. Factories make sneakers in China mainly with robots, and they can make those robots in America. They can buy them from Germany or Japan and make those sneakers at roughly the same price in America. And that's the gambit that they're playing, and they can pull it off. It can be pulled, not overnight. It's not Hollywood. It won't go like that. It will take a decade, maybe longer to do it, but it's doable. And if America doesn't do it, it will become the second most powerful country in the world. And it sounds like America don't want to be that, so they've gonna have to get their game on. And how much confetti you print is not really here or there if it's turning into product. And if it's turning into supply, not into demand. And it can, and it has. I mean, when I was a kid, when I was young like you, you could open a financial...
I'm not young, Clem. I'm not young.
You look young to me. But when I was a kid, you could take the Financial Times and there would still be articles saying this company got a contract for £800,000. Yeah, and a few years later, pretty quickly actually, it was millions of pounds, and then tens of millions of pounds, then hundreds of millions of pounds. Oh, and then all of a sudden, you'd only read about things that were billions. Well, hello, now we read articles about trillions. Yeah, and the dollar's gone down a bit in value since then, but the scale of activity has gone up way, way beyond that. And the numbers are, in fact, what confuses most people. They can't imagine $1 trillion, let alone getting paid it like Mr. Musk. A trillion, 1,000 billion, a million. I don't know, get your head around that. So, but that gives you a scale of where the economy of the world is these days, because of the flexibility and punch of printing confetti.
Yeah.
Don't underestimate the confetti. We all want it, after all, don't we?
Yeah, we sure do. So I'm curious in your perspective on, so obviously, AI driving productivity, and, robots doing the jobs of either immigrants or people who may have been, doing these types of jobs for years or decades. I think of farming and many other industries. But does that lead to universal basic income? Because right now we have a lot of entitlements, with Social Security, Medicare, and right now one of the issues is the birth rate within the United States isn't keeping up to drive enough revenue for these entitlements that have been promised. And so I'm curious if this exacerbates that problem.
Well, first of all, I've got two things to say about universal basic income. One, it's a Marxist idea. So anybody that starts talking about it, I'm going to ask them, are you a Marxist? Are you a Marxist?
Who, me?
Yeah.
No.
Well, don't talk about basic universal income then, because it's a Marxist idea. Anyway, secondly, go look it up. People go, oh, universal basic income. You go, are you a Marxist? Yeah. Well, no. Well, it's a Marxist idea, guys. Oh, is it?
Yeah.
So, but secondly,
Yeah,
They're
I'm
already,
not advocating for it. I'm just asking a
oh, okay.
question as
Well,
far as
secondly, it's
yeah.
already a thing. Yeah. Look, I don't know about America. You can go work out your numbers yourself, but I think you'll find
Hmm.
that America spends the equivalent of an average family's income on that family, defending it, doing whatever it does with it. Yeah. So certainly in the UK spends for an average family from taxation revenues more than the average family earns. Yeah. Well, that is basic universal income. However, you don't get the money. You don't get to decide what you're going to spend it on. They spend it on your behalf because they know better than you. Of course they do. We're not going to give you the money. We know what you need to spend it on, and we'll spend it for you. And that's not going to change. That is not going to change, because why would they give you the money and trust you to spend it properly? I mean, who do you think you are? They know everything. They're the government. They're the people, you know? So they will, doesn't matter how much they would like the idea, they're never going to hand it out willy-nilly. They just keep it for themselves and spend it on what they think you should spend it on. Yeah? And if you think that they're going to say, oh, no, we won't spend it for you. You are so much better at spending this money than we are. Go on, then have it. I mean, you know, that's a very right-wing idea. Yeah, and, you know, Trump's done planning to do a bit of it, planning to hand out $2,000 or whatever he says he's going to hand out. You know, the stimulus back in COVID was that thing. And what did it do? It kind of didn't have, it had certain impacts. That wasn't necessarily something that you particularly want to continue. But anyway, so I just say it already exists. Government's not going to give the money directly to you. It will spend it on your behalf. And the tendency is that they're spending more and more and more on you than they did in the past, and they're never going to hand it out to you directly to spend, because you know that's it's their only power, isn't it? And on top of that, the whole concept is Marxist, and unless you are a comrade, then you don't want to be thinking about that, or maybe you want to be looking up the origins of that idea.
Yeah. And I'm thinking like here, because, you know, people want free stuff, you know, especially, you know, when you look at the cost of living rising and inflation and such. I mean, you look at the phony numbers of inflation that the government puts out, and average people don't believe that crap, you know. So it's kind of like I'm wondering like how, I mean, we put a socialist mayor in New York City and such, and that seems like a pendulum shift far the other direction, because people want free stuff. And so it's kind of just interesting just looking at, okay, what happens in that scenario if, you know, robots take over, you know. And so just wanted to dive into that.
First of all, it's not going to be overnight. By the time people who are worried about this have actually got a problem, they'll be retired anyway. Yeah. So, you know, it's like these old guys, oh, I'm an old guy, what am I going to do for a job? It's like, well, you're going to be retired in 6 years, aren't you? Well, I suppose so. So, well, you don't need to worry. It's not going to happen tomorrow. It's going to be you know, a line towards that. And look, I used to have a treasure hunting channel on YouTube before YouTube decided they didn't like treasure hunters. And I go out on a field and I find buttons and badges and thimbles and money and you name it. Yeah. How come? Well, because all these fields were full of houses, because the farmers lived on the land. 95% of the people who existed were farmers. 95%. It's now 2.5%. Yeah. And those people, I'm sure they were very sad when all these machines came along and put them out of a job. Yeah. But they used to live to 47 years old, and 3 out of 4 of their children would die before they were 5. Well, the descendants of those people that probably trudged to the cities feeling sorry for themselves, those descendants live to 80 now, and they don't lose any children before 5. Yeah. So that was the outcome of the artificial muscle. Yeah. Well, now we're going to have artificial brain. And that's great, because the biggest risk is not AI. The biggest risk is NS. And you're going to say, what's NS? And I'm going to say natural stupidity. Natural stupidity is what we could all die from, not artificial intelligence. And boy, there's a lot of natural stupidity out there right now, and it's looking pretty spicy.
Yeah, for sure. I agree. So thinking about gold and the future of gold, obviously we have a lot of central bank buying, and gold recently reached over 4,300 in US dollars an ounce, and then came down a little bit. And so curious in your outlook on gold and where we head from here.
Well, the gold price is just going to represent the chances of China getting, its game on to try to do something with Taiwan. That's it. I mean, America and China are in a low-level conflict right now, okay? And that's why gold's going up, because gold is the currency of war. And any country that sees global geopolitical stress going up will buy gold. And Wall Street and all those guys cannot get in the way of sovereign buying of anything. They can't short it, muck them about, and shake out a country who wants to buy gold. So they have to get out of the way of the price. And it's going up because countries are buying it. Countries are buying it because it's a strategic reserve for global stress. So if you think global stress is suddenly going to go backwards, then gold will go down and you should be short. But if you think it's probably going to go up, gold's going to go up and you should be long. And I don't see an end to this stress, not for the next couple of 3 years anyway. And, you know, China has laid out its stall on Taiwan. And if that becomes a situation, that is going to really, really push gold a long way.
A long way. Okay, that would be
10,000.
10,000. Wow. So one of the concerns about that is gold at 10,000. We may live in a world where it may not, other parts of our life may not be as pleasant. And so, curious in your perspective on that.
Well, I said that a long time ago, but someone said that to me at this gold show, and I said, gold doesn't care about you. It don't care. It don't care one jot about you. If it's 10,000, it's 10,000. If it's going to 10,000, it's going to 10,000. There's nothing you can do about it. Nothing you can do about it. You can go to the ballot box. You can cast your vote. You can stand on a soapbox and say blah blah blah. You will have no impact. The only impact you can have is be right in the markets and have the financial resources to do something about you and yours if bad things happen.
Yeah, agreed. So thinking about gold, and I'm kind of wondering about the one aspect is obviously war. I've heard you talk about, you know, war and geopolitical conflict and such, and we've seen like gold rise on like these news headlines. I mean, I remember when Russia Ukraine initially started, you know, back in, well, it's been before 2022, but whenever the invasion happened, gold shot up, you know, came back down and such. What about the purchasing power of the U.S. dollar? I mean, why would the central banks want to hold U.S. dollars whenever the dollar has lost significant value since its inception? And so,
dollar is really strong. I mean, you know, people send me graphs of the dollar since 1872 and how it's lost 99% of its value. I mean, it's one of the few currencies that still exists from back in that period of time. And you know, it's I didn't hold dollars in 1865. And, you know, the dollars that I might have held in 1974, you know, it's money doesn't work like that. If your asset of choice is dollar bills, that's not necessarily such a great investment. But if it's going to go down 5% every year and you have that amount of dollars, but that amount of assets, it doesn't really affect you, right? I mean, people in South America or Turkey, for example, I mean, you know, $1 billion notes that will buy you a dinner, and they keep knocking the notes off and reprinting the notes. Their economy still goes on. It's just a different style of economy, and it's an economy that's less efficient and less fair and less stable, and a political system that's less stable. Unstable money leads to unstable politics, and nobody wants that. But the dollar, I mean, you say, why would central banks hold the dollar? Well, who says a lot of them do? I mean, they might say they do. But if I was a country and I didn't fancy holding the dollar, I'd just go out and hedge it. Mm-hmm. That'd be gone. I mean, I could get rid of it like that. Just hedge it out. Hey, ring up Goldman Sachs. Hey, Goldman, I got $47 trillion worth of dollars here. Could you just hedge it out for me? Yeah, takes us a few days. Bonk, gone. Right? And I would imagine that has been the case for China for a very long time. Very, very long time. They'd almost be negligent if they didn't do that. But anyway, that's really not the point. The dollar is actually strong. If you go look at all the major currencies over the last 25 years, you'll notice that the dollar is pretty strong. In fact, it's probably too strong. Yeah. And the dollar is going to come down 10% in value, international value, because that way you export more and you import less because of the price of your currency. And that would be good for American industry. Most countries, they want a weak currency. devaluation, competitive devaluation, has been the thing since the beginning of time, or since confetti anyway. You can't you can devalue your coinage. You just melt it down and put a little bit of copper in it, but that's a little bit more awkward than just increasing the amount of paper you print. But the dollar is not going anywhere. Yes, it's going down in value. Yes, 2 or 3 or 4 or 5% every year for a very long time into the future. But if cash is king only in very small windows, normally it's just a means to an end. And stashing cash, there's a difference between cash and near cash. If you go and you buy the S&P tracker, right? You take your $1 million of slowly shrinking dollars and put it in the S&P. Well, it's not so slowly growing, isn't it? And if you want cash, you can break a little bit off and you've got cash. So in a way, stacking cash, that's not such a clever thing. However, buying a house and levering yourself up to your ears, like most people do, to buy a house, well, when you're old and crumbly, that house is worth a blooming fortune. It's the only asset you've got. So, people should take a more generalized view of what is money, what is cash, what's near cash, what's not so near cash, what's quite a long way away from cash, what is not really liquid, what's illiquid, etc. And they would get they get a very different view from my dollar bills in my in the bottom drawer by my bed has lost value. I mean, I think that they need to think broader than that, because it's not about dollars, it's about assets. And the world's about having control over assets. And dollars are only a small part of that.
Yeah. Thanks for sharing that. So we've covered rare earths, copper, gold. A lot of our audience are silver investors, so want to see if you have any outlook on silver.
Well, I'm somewhat confused about silver, and I think one can think about how well gold has done, and then go, well, okay, gold has done really well, and it's probably going to do better. Silver will follow, so silver will follow. But the thing that makes me go, ugh, is they only make 25,000 tons of that a year, and they make 3,200 tons of gold. Well, that's an 8-to-1 ratio, at least in my, working it out quickly in my brain, what's left of it. So 8-to-1 ratio to silver, well, it's not an 8-to-1 price, is it? It's whatever it is, it's an 80-to-1 price or 70-to-1 price. So you would have thought, although the use case is different, because gold is for war, silver isn't for that. It's not a sovereign currency for global stress, but nonetheless it tracks. So you would kind of expect it to follow, because what it is, it's an asset for the general public. It's kind of like there's business to government with gold, and there's business to consumer with silver. Silver is the citizens' gold. And you can see that in the way gold has been used over the years. Gold was for big transactions. You didn't carry it around with you. You buried it in a pot in the corner of your mud hut, if you had any. Yeah, silver was for big transactions, and copper was for day-to-day transactions. So that's the hierarchy of old style money. And it's still the same today. So, gold is government money, silver is citizen money, in a sense. So it is sort of bound to gold in a way. But when people like us get, a little bit stressed out and think of precious metals, silver is kind of the fast horse. So I think that silver will follow along. And again, silver could easily do $100 an ounce.
Mm-hmm. And do you have any outlook on the increasing industrial demand? I know President Trump put it on the critical minerals list as a critical mineral. And so curious in your perspective there.
Well, totally. You see, this is where I sound a little bit mad, and everyone would say I was contrarian, in that I believe coming up next is a gigantic economic boom driven by rare earths and the like, and new technologies, but especially AI. AI is going to absolutely slingshot the global economy. And that means all these commodities, as I say, become luxuries, because at the base of the pyramid, if you're going to expand an economy so much, all those commodities that are in balance at level A, suddenly you haven't got enough at level B. And if it's heading towards level C and level D, what are you going to do? Well, you're going to have to invent new stuff, and you're going to have to find new ways of making it go further, etc. And capitalism is very good at that. Very, very, very good at that. but it's going to be going at such a pace, there'll be catch up, a lot of catch up, and that will mean that prices will go up dramatically, I believe. And you can already see that now. You can already see people saying, oh, hold on a minute, we haven't got enough power for this. My home electricity bill's going up because it's all being sucked up by AI. Yeah. And AI, I mean, Musk said it's going to use all the energy of the solar system and the galaxy, and that's a pretty wild thing to say, but that is Elon. And if you think about how smart and how rich he is, you might want to kind of, scale that down a bit. But even if you do, you go, oh, wow. And, Bezos claiming that he's planning to launch server centers into space. Sorry, into space? What science fiction movie am I watching? But again, not a stupid man. And he's saying that he's planning to launch AI server centers into space. Well, that shows you what the people that know, what some people would class as the Illuminati, what they're thinking, and the scale of what AI is going to do to the economy, that you can start launching your server centers into space. So I think even if you turn that down from 10 to 1, yeah, you see that there's going to be this massive economic expansion, and it's kind of started. And it drip, drip, drip. But it's going to do that in the next 5-6 years, which is why people should not be doomy about everything, and why they should be looking to find ways to get on their front foot to take advantage of this. Because I don't know about you, but if you read every headline since 2008, you'd be hiding under a rock with your cash and your pork and beans and your AR-15. And you would have never bought any stocks, and you'd never got an Nvidia or an S&P 500 or any of that stuff. And boy, would you have missed out. You would have missed out terribly by reading all the doomsters and how it's all coming to an end, and how the dollar's dead, and how the markets are never going to come back, and how it's going to crash tomorrow. And in fact, if you just sat there, took all your money and put it on Apple, you would be singing Hosanna.
Yeah. I think it all comes down to risk management and having a balanced perspective, and so that's why I'm glad to hear you sharing your perspective. So thinking about Bitcoin, pivoting to Bitcoin, I know you've done a few videos on that. Is the Bitcoin bull run over? Like, what's your take on Bitcoin right now?
Well, it's about drivers, right? And the driver of Bitcoin, strategically, long term, is the halvening. And by now, we should already be down a lot lower than we are now if you looked at past halvening cycles. It hasn't come down. It's gone into the institutional level, and it's kept up. And there's been all the sort of troubles in the world that Bitcoin thrives on, and that's kept it afloat. I would say that there's a better than half chance that we're already on the way down through 80,000 to the crypto winter that everybody talks about. And whether it's just happened or whether it's going to happen in the not too distant future is another matter. There's always something that could turn it around. Okay, there's always some random bad news that you didn't know was coming that could make Bitcoin go up. But without that sort of injection of chaos, I think we're definitely in a bear market. And I look at that chart and I say it's not guaranteed, but it's doing what I said it's probably going to be doing, and I've been saying it for such a long time I can't claim to be right. But it's kind of doing now what I said it would do, and why I got out a year ago. I got out 100,000 because I didn't fancy the extra 20 that I thought it was going to go when I was looking down a 40 or 50 drop. So I just said thank you very much. I bought at 20s. I'm out. Goodbye. 5x. Thank you. And over to you, boys. And it's it hit the 120. It's been going sideways ever since. I would have thought it would be doing what it's doing now 6 months ago, but it hasn't. And now I think it's probably doing what I'm expecting it to do right now. But, I can't think of a reason to be long Bitcoin. I don't short. I certainly wouldn't short Bitcoin. You'd be mad to do that in any event. So, it's just like not the most exciting asset out there. And another thing that some crypto kids told me, and I thought that's very, very sound, was if you take the high of the previous Bitcoin cycle, 68,000, I think it was, and then you add the inflation we've had since 2021, you're almost up to where we are now anyway. So it's almost not gone up in real terms in your dollars. So, if you bought at the previous high, you are not in the money, inflation adjusted. And I think all that 10xing is over now. But there will be huge opportunities to make massive amounts of money from nothing in blockchain, which is kind of what crypto is. It's a superset of what crypto is, yeah? And blockchain coupled with cryptocurrencies will generate the next big move in crypto and the next massive opportunity to make money. But it won't be about cryptocurrencies and DeFi and mucking about with leverage and all that and gambling on which crazy rug token's going to go explode tomorrow. It will be about people producing products using crypto and blockchain that could not be done without that technology, that open up huge markets. And that's coming next because the American government has said we won't throw you in jail now if you do that. And that will open the gates to lots of young, brilliant people to make innovative products that will go from being worthless to being worth a lot. And that's coming, well, it's coming very soon, I should think. Next year, you'll see some of it.
Mm-hmm. Yeah. Thank you for sharing that. So just thinking about Bitcoin's role in all of this, some people have called it digital gold. Some people say it's a hedge against inflation. They'll point back to the charts showing that Bitcoin's up 100 and something percent since whatever year. People like to pick and choose their time frames and such. What do you think the purpose of Bitcoin is in all of this? Do you see it as more of like hard money? What's your perspective on it?
Well, Bitcoin was fabulously exciting when government didn't know about it, didn't care about it. It was just a crazy thing that everyone kept asking people at press conferences. But when they started to engage with it, you know, the whole point of Bitcoin was that it was an anarcho-capitalist thing. Well, it's no longer that. It's now part of the financial infrastructure. So one way of looking at it is now it's just another asset. All that magic, all that invented magic, all that independence from the financial system, all that anti-governmental, anti-banks, all that anarcho-capitalist stuff, that's all gone now. So the whole thing about Bitcoin is that it's changed. It's no longer a revolutionary thing. It's now just part of the landscape, and it's just another asset. And I think it's about as heavy as it should be. And yeah, it could double in the next 5 years. Yeah, next doubling, it could do that and double again after that. But if you're prepared to wait 12 years for $1 million of Bitcoin, you're welcome. And I think if it's ever going to go there, and it probably won't, it will take a decade to do it. But it's just another asset. It really is just another asset. And the other thing about the $1 million per dream is that, you know, your Bitcoin could be worth $1 million and your pint of beer could be $200,000. You know, that can happen. Don't think it will happen. But there's enough currencies out there with lots and lots of zeros on the end of them. $1 million a Bitcoin doesn't make you rich if, you know, you get incredibly hyperinflation and really bad things are happening. So I wouldn't say it wouldn't do it, but it's more likely to do it if there was hyperinflation than do it if things remain as they are today. So I'm just not interested in the old crypto. Everyone says altcoins, uses that phrase. That's so yesterday, and things have moved on. I think in the blockchain, and Bitcoin will always be a thing, and certain cryptos will always be a thing, and there'll always be lots of fun to be had gambling. But actually adding wealth, actually being able to back something that will go 10x. That's coming, but it's not in the format we're used to. It's in the format of use cases for cryptos, and those use cases giving people opportunities to use crypto to invest in new projects, which will be generated by the next generation, or even this generation, of really young kids who've got bright ideas and are the next generation of the Zuckerbergs or the Gates and Jobs of the generation before.
Yeah. Thanks for sharing that. So it sounds like more of the blockchain technologies and more of the blue chip kind of crypto companies that are actually providing real world usage could be something.
Yeah, and there's very little of that. But you'll stumble across something one day in not too distant future, and it will be a crypto thing, and you'll go, oh yeah, I've got to put some Ethereum in there. All right, I'll put some in there. And it'll do something amazing. You go, that's amazing. And that's the one that you want to, buy its tokens or whatever access you want to get to it. That stuff is coming. That is definitely coming, and it will. People who can spot those things early and get in on the ground floor and not pick ones that get them rugged, stand a good chance of making very, very, very good returns.
Yeah. Well, thanks for sharing that, Clem. So where can the audience connect with you, read some more of your work and such, plug the audience with what you're up to?
Well, I've written on Forbes for 25 years, and you can see all the stuff that I've been saying over time, most of it contrarian, and a good proportion of it, a very good proportion of it came so you could benchmark me. But I'm on YouTube, and on my channel, Clem Chambers Alpha, and I've got a Substack which I just started, which has got really lit up, much to my pleasure. Substack, which is Clem is here at substack.com. And if you're UK guys and you want free real-time and free level 2 book information, I've just started a website. We're the only people that do it free. Everyone else charges like 50 for a month, and it's completely free and will remain so. That's a new FN. So you go check in there for free and get your real-time prices. I mean, it's crazy in the UK. You want to know what the price of a share has done when it's opened and gone through the floor or gone through the roof. You can't get it. You're 15 minutes delayed. What is that? But with this site, you can get it real-time and the level 2 order book, and it's all free.
Yeah. You all heard it from the man himself. So, Clem, appreciate you for coming on the show and everything. Look forward to having you back sometime. You all be sure to hit the subscribe button. Love to have your support for the channel as we continue to put out content like this. And until next time, and thank you, Clem.
That's my pleasure. And I'm going to add this on the end of this so that you can cut it out and use it if you want to, which is, hey, subscribe to Daryl. Subscribe and like and ring the bell and make a comment and share it and all that stuff, because that's the only way he can carry on this channel, is by having an audience big enough. And unless you, the audience, repay him with that effort, it's very, very difficult. So get out there, support him, do that clicking and commenting, and get him on the algo map. Because if you ain't on that algo map, you ain't anywhere.
Yes. You all heard it from Clem himself. Appreciate you, Clem. Take care.
My pleasure.